Coming up on Business Incorporated. Egypt signs an agreement worth $3 billion to produce up to 350,000 tons of green fuel. Ghana 2021 GDP growth beats forecasts, fourth quarter surprise. Plus, Italy gets Angolan gas after deals for North African supply. Great to have you join us on Business Incorporated. I'm Ladi Williams. First off, let's look at how your money is performing at intraday. We kick off with numbers from the African continent where it's mostly negative. The NGX was trading low at intraday, down by 0.01%. Same with South Africa's JSE index fell by 0.54%. Also on the continent, Egypt's market index was in the green at intraday. It gained 1.09%. For the Nairobi Stock Exchange in Kenya, closed Wednesday's session positive, up by 0.04%. And now to the Middle East, where it was mostly positive. The Abu Dhabi index crossed the 10,000 level after gaining 1.19%, while Dubai's index advanced 0.39%. Still within the region, the Qatari index also crossed the 14,000 new level with a 0.25% gain at intraday, while Saudi Arabia's main index was the lone loser within the region we track in the Middle East. And over to Europe now, where European earning reports are flooding in and offering a look at how businesses across Europe are handling inflation. Well, we have Chelsea Delaney joining us right there from Berlin. Great to have you, Chelsea. Well, walk us through some of the reports we've seen in recent days.
So these are just the beginning days of the European earnings season for the first 3 months of 2022. But so far, the message we're getting from companies here in Europe is that price increases are coming for consumers. We've already heard from some of the biggest food and beverage companies in the world that they are raising prices and they plan to do so even more in the months ahead. Nestle, the biggest food company in the world, reported this morning that it raised prices by 5.2% in the first quarter of the year. That's of course due to rising inflation for a broad range of commodities, lots of goods. And they also mentioned that they will likely have to raise prices further throughout the year. They're mentioning North America and Latin America as the regions that are seeing the biggest price increases right now. We also heard similar comments from Danone. You may know them best as a bottled water maker. They also sell yogurt. They also raised prices by about 5% in the first quarter, and once again said that more price increases are coming. And lastly, I'll mention Heineken, which is a Dutch beer company, the second biggest in the world. They just reported a huge 36% increase in revenue for the first quarter, and they said assertive pricing across all regions, in addition to people returning to bars and restaurants in Europe and Asia, is the reason for that big increase in revenues. But also, like Nestle and Danone, they said that price increases are not likely to be the final ones for the year.
And obviously, we've seen investors react to most of these earnings. But how's it going down in markets in Europe?
What's interesting is that from these three companies that I mentioned there, they've all reported results that were generally better than analysts had been expecting, and we did see investors really rally around them. Heineken shares rose by about 5% after their quarterly earnings report. Danone was up about 8%. Nestle also saw shares rise. So I think these are examples of how so far, despite, inflation at decades highs, and many of these companies are also reporting losses stemming from business in Russia or Ukraine and the disruptions from the war, but they still are seeing sales growth and they're still able to raise prices, and that hasn't yet led consumers to stop buying their products. And generally that's what investors are expecting from European companies for the first quarter of this year. Profits are expected to grow by 25%, and that's for companies in the stock 600 index. That's the pan-European index. That's actually a lot more optimistic than what analysts had started the year expecting. They had only expected about 15% growth in January of this year, so they've actually gotten more optimistic in the past couple of months despite all of those risks. the war, inflation, central banks moving further and further along the tightening cycle. So much of that improvement is coming from energy companies, which have seen profits really surge because of high oil and gas prices, also related to the war. But analysts are also warning that even, as companies are getting away with hiking these prices now without killing off consumer demand, that doesn't mean it's going to be that way forever, or actually even for much longer. Morgan Stanley, for example, expects that while this first quarter will see strong earnings, they do think that that earnings will start to fall in the quarters ahead because of inflation.
Quite interesting. But new data out this morning showed German exports to Russia plunged 58% in March. I talked about this earlier. How big of a blow is this to German businesses?
It's a huge blow. It's a €1 billion blow to German businesses. That's how much the value of those exports fell by, and that's significant. At the same time Russia fell, it's now Germany's 12th biggest trade partner, from being the 5th biggest trade partner for Germany before the war. Germany's main exports to Russia are machinery, cars, chemicals generally. So it will hit the industrial base here, in particular in the auto sector, and those are of course the backbone of the German economy. And many of those companies that we've heard from, they are a bit reluctant to fully give up on that Russian business. Bayer, for example, the chemicals company, is saying that they're going to continue supplying essential goods to Russia. Volkswagen has suspended production in Russia, but there are reports that it could restart production there this summer. So they don't want to fully give up on that Russian business, which is quite crucial. But I'd also note at the same time what we saw from this March data that came out today, even as Russian exports fell, 57, 58%, Germany was able to largely make up for that by exporting more to other countries, particularly the U.S., which saw exports from Germany rise by about 21%. Also, Australia, Japan saw pretty big increases in exports from Germany. So there are other areas that Germany is able to make up for that loss from Russia.
Yeah, the impact to trade is far-reaching. That was Chelsea Delaney right there from Berlin. Thank you so much, Chelsea. Well, let's head on to the UK now, where it's more news about the Chelsea Football Club bids. Now the UK, we have Juliana join us right there. Great to have you, Juliana. Well, Chelsea's sale is getting quite interesting. We're seeing Sir Lewis Hamilton and Serena Williams, two of the world's biggest sports stars, committing millions of pounds to one of the bids, vying to become the new owner of the Chelsea Football Club. What are you hearing about this?
Yeah, good afternoon, Laddie. Just as attention around the bid for Chelsea Football Club was going cold, it's been spiced up this morning by the announcement, as you said, of two of the world's biggest sporting stars joining this consortium, which has been led by the former British Airways chairman, Michael Boughton. And now both Serena Williams and Sir Lewis Hamilton have pledged to put in about £10 million each. And they're not the first superstars to show an interest in the English Premier League. I remember a couple of years ago now, LeBron James, one of the biggest names in the NBA, bought a small stake in Liverpool FC. So now we just have to wait and see what happens to Stamford Bridge. I think it's got a price tag of about £2.5 billion. Initially, Roman Abramovich, the former owner, was expecting £3 billion. But of course, there are so many issues with regards to the sanction. I think the Rain Group will be happy to accept the £2.5 billion. Now, the Rain Group are a New York-based merchant bank. There have been a series of rounds in the purchase system. We are now at the final round. Now, there are three consortiums, but of course, the one that's getting the most attention is this one that has been joined by Sir Lewis Hamilton, who I believe is a 7-time Formula One champion. And then, of course, everybody knows Serena Williams, 23-time Grand Slam champion. So we just have to wait and see. But yes, it's certainly added some pizzazz to a pretty drawn-out bid to who is going to take over Abramovich.
Quite interesting. Well, we'll be tracking to see how that bid goes. But the National Audit Office investigation has found quarantine hotels for inbound travelers to the UK during COVID have cost taxpayers more than £400 million, including almost £100 million in unpaid room bills and fraud. Quite interesting.
Yeah, this won't make for a decent reading for Grant Shapps, the Transport Secretary, or Rishi Sunak, the Chancellor, who's currently in Washington, because, of course, we know that this hotel quarantine system was highly controversial. And when it was first launched in February last year, the taxpayer was told that it would break even, that because there were so many extortionate costs, I think it cost people about £240 a night to have the pleasure of staying there for 11 days. It was expected that this would cover the costs, and alas, this report has revealed that that is not the case. In total, it's cost about £757 million, and yes, you're right, £400 million of that money is going to have to be paid by us, the taxpayer, here in Britain, because of various issues. One of them you mentioned, fraud, about £100 million, also on unpaid bills, which is pretty interesting, because what we were informed was that before you could even click or pay for your flight to the UK, you would have to pay that bill. But allegedly, there were so many touts online selling the hotel packages for 50%. I think some passengers were able to show this and gain entrance into the hotel. Meanwhile, the hotel got none of the money. I think their hotels are also being owed about £70 million for COVID testing. So it's a little bit of a mess. I think 214,000 people who were travelling from red-listed countries had to stay in those hotels, most notably, of course, Nigeria too. However, there are several passengers who have been able to get refunds, and those refunds are ongoing.
Quite interesting. But how are the markets looking at intraday?
Not bad at intraday. It started off, actually, the FTSE in negative territory. It's pulled down by commodities stock, but there has been some relief. The all share is up 0.29%. The FTSE 100, that's up by 0.19%. And the FTSE 250, the domestic market, that's up by 0.84%. In the currencies market, the British pound is currently trading down against the US dollar by 0.17%, down 2 against the euro by 0.5%, and down against the Japanese yen by 0.05%. Laddie.
All right, Juliana, always great to talk to you. Thank you so much, Juliana. All right, now let's take a look at what's happening in Asia. We see shares were mixed today as investors continue to watch China's COVID situation, along with moves in the Japanese yen. Chinese stocks led losses regionally, with the Shanghai Composite shedding 2.26% to 3,079 points, while the Shenzhen component fell 2.70% to 11,084 points. Hong Kong's Hang Seng Index slipped 1.25% to close at 20,682 points. The Nikkei 225 in Japan gained 1.23% on the day to 27,553 points, while the Topix Index advanced 0.67% to 1,928 points. South Korea's Kospi climbed 0.35% to close at 2,728. In Australia, the S&P ASX 200 nudged 0.31% higher to end the trading day at 7,592 points, while MSCI's broadest index of Asia-Pacific shares outside Japan shed 0.37%. And now to the U.S. Stock futures rose in early morning trade as investors digested more quarterly reports from the likes of Tesla and United Airlines and awaited a policy speech from Federal Reserve Chairman Jerome Powell. Futures on the Dow Jones Industrial Average added 184 points, 0.52%, while S&P 500 futures ticked up by 0.80%, while the Nasdaq gained 1.07%. Investors are awaiting quarterly reports from companies like AT&T, American Airlines, and Snap on Thursday. Also, weekly jobless claims are also slated for release later today. All right, we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. Now for Commodities Market Update, our focus is LNG, liquefied natural gas. There's been price volatility in the market since 2020. In the week ended April 8th, 2022, the price of LNG Asian spot prices declined by 13.8% from $36 per million British terminal unit to $31, considering that LNG accounts for 9.95% of Nigeria's exports. How's this going to impact on Nigeria? Well, we have Lawrence Messi, analyst at FDC, Financial Derivatives Company, join us on the program. Great to have you.
Thank you for having me.
Yeah, so how does this volatility impact Nigeria's revenue potential, and what is the cause of the oscillation in LNG prices?
Well, if you look at the fourth quarter foreign trade report statistics released by the NBS, as you've rightly said, LNG accounts for about 9.95% of exports. And to put some context into this, that's almost about 500 billion naira in just the fourth quarter. And if we were to translate this into dollar earnings, that's roughly about $1.3 billion. Currently, the foreign reserves are oscillating between $39 billion and 41 and 42. So if we actually analyze this, right, $1.3 billion times 4 quarters, that's roughly $5.2 billion. If you take that out from our foreign reserves, then we're facing a huge problem. We're facing potential currency devaluation again. We're facing exchange rate pass-through effects on inflation. So this volatility is actually not sustainable for the Nigerian economy, considering the amount of weight that LNG exports have in our foreign earnings and our foreign reserves. Now, to answer your second question, what's causing this volatility? Well, it's largely due to increasing demand, especially in the Western world, especially as winter occurred last year, and low supply. So there's been a demand-supply mismatch globally, also followed by the fact that there are low storage levels in Europe, especially that needed the LNG for heating and other gas-related needs. And as we are in May this year, we're entering spring in the Western world, so we're probably seeing demand drop, and that's causing a lot more oscillation in the price. So all of these factors account for why there's so much volatility and why it's actually not sustainable for Nigeria's exports and foreign earnings position.
Quite interesting, because we're seeing, Europe, try to reduce our dependence on Russia, at this point. But is there an opportunity for Nigeria to take advantage of this development, to maintain and increase its position in global LNG exports?
Is there an opportunity? Yes, there is. Can we take advantage of that opportunity? That depends. I'm just going to look a bit at Egypt. So Egypt has actually become the fastest growing exporter of LNG among Middle Eastern and Arabian nations. They've got projects in the pipeline that includes is an undersea cable between themselves and Israel. They're also in talks with Greece to increase their supplies of gas to Greece. So Egypt is actually taking advantage of that. But as you can see, there is a time lag because there needs to be investment. Now, if we bring this closer to home in Nigeria, what we can see is that NLNG Limited has a capacity of 22.5 million tons per year. Though there's a 7th train project that will increase capacity to 30 million tons per year. That, however, is going to take a couple of years before it comes online. So at the moment, we need massive investment in order to increase capacity, to increase export. So there is an opportunity to take advantage, but at the moment, our capacity won't allow us to take that opportunity. And in 4 to 5 years, most expectedly, the Russia-Ukraine war should have died down or should have been resolved. But still, there would be a need to strategically place NLNG supplies in Europe so that there won't be heavy dependence. So there is actually still an opportunity in the long term. So I guess we just need to ensure that the investment and the capacity is in place for us to take advantage of that.
Right, because at some point it's going to get cold again, in Europe. But, LNG is used for, heating, fertilizer production, electricity generation, and, a host of other applications. Considering that industrial demand currently dominates the space with an estimated 33.5 billion cubic meters per day used, in December. That's the data from 2021. What is the outlook for domestic demand?
Nigeria is a special case in the sense that, well, we don't really face heavy winters. There's no snow, there's no cold. So a lot of domestic demand will largely be driven by households that have heating needs in order to preserve warmth during cold times. Well, as you said, industrial demand focuses on electricity generation, fertilizer production, and a lot of other chemical uses. So considering Nigeria's climatic condition, we can expect that domestic demand will not necessarily rise as much. It may even drop. However, it's not too late to note that climate change has become an ever significant factor in discussions today. We've seen how climate change has affected Brazil's production of goods. So we can also probably expect that climate change will lead to more extremes on either end of the temperature scale. So we might see the cold part of Harmattan becoming a bit colder. And we can as well also see the hot part of summer becoming hotter in Nigeria. So you can't write this off, but in the short to medium term, I don't expect domestic demand for LNG to increase. But in the longer term, then there might be a conversation around increasing domestic usage of LNG.
All right, Lawrence, thank you so much for always bringing us up to speed with all those commodity price movements. That's Lawrence Messi, analyst, financial derivatives company. It was great having you.
Thank you.
All right, now, so Egypt has signed an agreement worth $3 billion to produce up to 350,000 tons of green fuel annually for ships passing through the Suez Canal. The Egyptian cabinet and the Suez Canal Economic Zone confirmed this, and the deal for the green hydrogen mega project in Soka on the Red Sea was signed between the government and the Green Fuel Alliance Consortium, led by French firm EDF Renewables and Egyptian company Zero Waste. The Egyptian government was represented by the General Authority for the Suez Canal Economic Zone, and this is meant to boost green energy production at this time when it is most needed. And Ghana's economy grew at the fastest rate in 2 years in 2021, beating forecasts by the government and the International Monetary Fund. After a better than expected fourth quarter, gross domestic product grew 5.4% last year after expanding a revised 0.5% in 2020. And reporters in Ghana also confirmed that the government is also looking at ways to boost this in 2022. GDP expanded 7% in the 3 months through December from a year earlier, compared with a revised 6.5% growth in the prior 3 months. The growth rate exceeded the fourth median estimate of 6 economists in a Bloomberg survey. Growth in the fourth quarter is buoyed by the agriculture and services industries. And Italy has struck a deal to boost natural gas imports from Angola as the government rushes to cut energy dependence on Russia. The accord, which builds on recent supply agreements with Algeria and Egypt, comes as European countries scramble to secure alternatives to Russian gas amid the war in Ukraine. Africa is an attractive option for Italy, with energy giant Eni already present in more than a dozen countries in the continent. The deal reached Wednesday will increase Italy's gas purchases from Angola and facilitate joint energy projects that will also involve renewables and liquefied natural gas. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.
Stay connected to the world.